Let's get a move on then. Talk about the global coverage this morning. Let's start by talking about the big news yesterday post-market, and just a day after the Fed chairman hinted at a September rate cut, the Bank of England went ahead and delivered its first rate cut in more than 4 years, taking the key interest rates to 5%. Policymakers ultimately voted 5-4 in favor of the reduction, with Governor Andrew Bailey saying that the committee would move ahead cautiously. The bank rate had been held at a 16-year high of 5.25% since August 2023. Bailey alluded to easing inflationary pressures that have led them to finally cut rates. Let's also go across and listen in to what Siddharth Sanyal of Bandhan Bank said about RBI's cues from the Fed and the Bank of England's rate decisions.
Us here at home made his choices pretty clear. He clearly indicated in his case the domestic factors are far more important. Obviously, global factors do play a role, but domestic factors are far more important. Looking at the domestic factors, very clearly inflation has cooled off, though there has been a bit of an uptick in the last spring. I think we are on a comfortable trajectory there. I would not really still expect him to cut in this particular policy, and in fact in the next few policies also. But what I would definitely expect that RBI start infusing a slightly higher quantum of liquidity in the banking system. If you have seen over the last several months, there had been a bit of a crunch of liquidity off and on in the banking system. Several banks had to raise their deposit rates very significantly. I would expect the central bank to start infusing a larger quantum of liquidity in the market instead of thinking about tinkering the rates.
Okay, that was about Bank of England, but let's move on. And Amazon, Sneha was mentioning how they reported their numbers as well. So weaker than expected numbers in terms of revenue for the second quarter, and they issued a disappointing forecast for the current period. Now, the company also issued a disappointing forecast, what one was watching out for. And Amazon forecast revenue in the current quarter is to be at between $154 billion to $158.5 billion, representing a growth of 8% to 11% over the year. Now, the shares of Amazon actually fell in trade and hit around a 6% fall that one saw coming in after trade hours. So keeping an eye out on Amazon.
Well, let's keep it going with earnings then. Tech giant Apple has also reported a beat on their third quarter results with an overall revenue growth of 5%. Going forward, they expect revenue growth in a similar range, but not just that, the company also expects services to grow at about the same rate as the last 3 quarters. Their most important business remains the iPhone, which accounted for about 46% of the total sales.
Okay, let's move on and moving on to Intel, because that also reported its numbers, and when you're looking at it, Intel shares fell as much as 20% in the extended trading session after the chip maker said that it would lay off about 15% of its employee base as a part of a larger cost-cutting drive. The company also said that it will not pay its dividend in the fiscal of the fourth quarter, that they normally pay the dividend. That will not be happening. Will be lower for the full year capital expenditure by over 20% as well. So clearly a sharp fall that is coming in for Intel, and layoffs is what they have announced.
Alright, that's a wrap on all the important global stories that we were covering for you. But on